Amidst a turbulent economic landscape, all eyes are on the Federal Reserve as experts anticipate a potential rate cut in the year 2024, along with a strategic pivot away from the policy of balance sheet reduction. This significant monetary shift occurs alongside the buzz of an upcoming election, which promises to propel fiscal policy and economic health to the forefront of political debate. The Federal Reserve's policies have long been a cornerstone in the American economy's stability and growth. In an era marked by the upheavals of a global pandemic and the subsequent complexities of economic recovery, inflation has emerged as a formidable challenge for central bankers and policymakers alike. Rising prices have squeezed households and businesses, prompting the Fed to raise interest rates in a bid to cool the economy and bring inflation under control. However, the landscape for 2024 hints at change. Indications from Fed officials suggest that there may be a pause or even a reversal in the tightening cycle, which investors and analysts are carefully monitoring, given the broader implications for the economy and financial markets. Lower mortgage rates could provide a breather for the housing market, which often reflects the broader health of the domestic economy. First-time homebuyers, in particular, who have been discouraged by the high cost of borrowing, could find renewed opportunities in a more accommodative lending environment. Significantly, these monetary policy decisions are occurring against the backdrop of an upcoming election, providing a politically charged context. The economic policy of the Federal Reserve does not occur in a vacuum, and while the institution operates independently of the government, its decisions are inevitably intertwined with the political climate. Candidates vying for votes will undoubtedly seize upon the health of the economy and the perceived success or failure of the Fed's policies in their campaigns. The relevance of this evolving situation is multifaceted. For one, it sheds light on the delicate balance that the Federal Reserve must maintain between managing inflation and supporting economic growth. Additionally, the actions of the Fed can serve both as a bellwether for the economy's direction and as an amplifier for political narratives. Stakeholders from Wall Street to Main Street are tuned in to interpret how the interplay between the Fed's policy changes and the election cycle will shape the economic landscape of the future. Analysts, while acknowledging the difficulty in forecasting the Fed's exact course of action, underscore the importance of remaining vigilant in monitoring economic indicators and policy statements. The ripple effects of any adjustments to interest rates and balance sheet policies are expected to touch various sectors of the economy, from consumer spending to business investments. As the election draws nearer, the dialogue surrounding monetary policy and its implications for growth, employment, and inflation will only intensify. The decisions made by the Federal Reserve in this period will be critical in setting the stage not just for the forthcoming election, but for the long-term trajectory of the U.S. economy.